SA 300 Planning and Audit of Financial Statements. Who shall be involved in planning audit? Engagement partner and other key members drawing from their experience and insight and enhance effectiveness and efficiency of planning process. The process is divided into two types: preliminary engagement activities and planning activities. Preliminary engagement activities include, as per SA 220, quality control, performance procedure regarding acceptance of client relationship in specific audit engagement, ensure ethical requirements compliance, understand the terms of audit engagement. Second, planning activities involve establishing an overall audit strategy. CRPS. Identify characteristics Identify characteristics of engagement that defines its scope. Example, coverage and location of components, nature of business, and expected use of audit evidence in previous audit. B. Ascertain reporting objectives of engagement to plan the timing of audit and nature of communications required. Example, table of reporting, organization of meetings with management and TCWG to discuss NT of audit, expected type and timing of report and oral communication. Consider the factors that in auditor's professional judgment are significant in directing the engagement team's effort. Consider the results of preliminary audit engagement activities. Ascertain the nature, time, and extent of resources required to perform the audit. Management of the resources. First, deployment of qualitative resources, allocation of quantity of resources, time of deployment of resources, and management of resources. Overall audit strategy versus overall audit plan. Overall strategy is prepared before the audit plan. The audit plan is more detailed than the audit strategy. The strategy provides guidelines for the plan. The audit strategy, once established, audit plan can be developed to address various matters in overall audit strategy. It is not necessarily discrete or sequential but closely interrelated and may change due to one auditor. Audit plan to conduct effective audit. To conduct effective audit, the audit plan must cover acquiring knowledge of client's internal control system and accounting system, degree of reliance on control system, deciding the NTF of audit procedure, and coordinating the work done. Knowledge of client's business, relevant industry, regulatory, and other external factors including applicable FRA, nature of entity, its operations and ownership, the entity's selection of accounting policies and reason, and whether it is appropriate and consistent with applicable FRF and industry. The entity's reporting strategy and business risk resulting in risk of misstatements. The measure of entity's performance. Then, how to plan, direct, and supervise and review. The auditor shall plan the nature, time, and effort, or direction, supervision of review of engagement on the basis of size and complexity of audit, area of audit, assess risk of material misstatements, capability and competency of individual team, SAAC. Audit program. Evolving into one audit program is not practical for all businesses as the factors may be vary in size and composition. What suitable for one business may not be suitable to others. Efficiency in operations and internal control and nature of service rendered by the auditor. Open mind must be kept by article assistant. Open mind must be kept by article assistant to frame the standard program. Situation left out now relevant must be included. The situations included now irrelevant must be excluded from the program. Article assistant should keep open mind and instruction to assistant to take note and report on significant matters. Audit planning is a continuous process, not discrete process. It may change due to unexpected events, change in conditions, and audit evidence obtained. Constructing and developing of audit program. Understanding accounting system and internal control system. Prepare written AP specifying procedures. Consider possibilities of error. Consider the timings of procedure. Coordinate with client, assistants, and expert. Stay within the scope of limitations. Advantage: स्टाफ जैसी हो सीरीज जैसी एंड पार्टनर का सफर अच्छा रहे. Selection of article assistance, instruction to staff, responsibility of fixation, And ignorance, no ignorance or overlooking. Partners, supervision of articles, safeguard of auditor, future audit help, reporting basis, and track progress. Disadvantage includes MIA, mechanical approach and monotonous, inflexibility and lack of initiative, and shelter for inefficient assistance. SA 315, identifying and assessing the risk of material misstatement through understanding the entity and its environment. Audit risk means that the auditor would give an inappropriate opinion on the financial statements. Audit risks include the risk of material misstatements and detection risk. ROMMS includes inherent risk, the susceptibility of the assertion about a class of transaction, account balance, and disclosure to misstatement that could be materially individual or with other misstatements before consideration of any related control. Second is the risk control. The risk that material misstatement that could occur in assertion about a class of transaction, accounting balance, and disclosure of a misstatement that could be materially individually or with other misstatements will not be prevented or detected and corrected on a timely basis by entity's internal control system. Detection risk is divided into sampling risk and non-sampling risk. Detection risk is the risk that the procedure performed by auditor to reduce the risk to a low level will not detect misstatement that exist could be materially or individually aggregate. ROMMS is inversely proportional to DR. Now, important part, obtaining the understanding of the environment, relevant industry to which it belongs, regulatory and legal environment, applicable FRS, accounting policy, ownership and management. Internal control system, achievements or objectives, achievement of objectives, reliable FRS, effective and efficiency in audit, safeguarding of assets, and compliance with law and regulation. Benefits, identifying potential misstatements, identifying the factors affecting risk of material misstatement, and design the nature, time, and extent of audit procedures. Inherent limitations, errors in human judgment, cost of maintaining internal control exceeds its benefit, collision of two or more people, management interference over managing internal control, and most internal control not targeting towards unusual transaction. Benefits of internal control to auditor within the error of fraud in operations of the business, adequate internal control in place, effective develop, audit department, whether the controls to safeguard the asset, area where control is weak, and suggestions to improve the internal control. Control environment. Management with oversight of TCWG maintains a culture of honesty and ethical behavior, good internal audit system, good internal check system, risk assessment procedure, and actions to identify risk. Risk requiring special audit consideration, risk of fraud, complexity of transaction, change in regulatory environment, and related party transactions. 320. Materiality in planning and performing the audit. Benchmarking. Benchmarking is a percentage is often applied to a chosen base as a starting point in determining the materiality of the financial statements as a whole. The step 1 is deciding the base, that is, identification of appropriate benchmark. It includes A, love N. This is attention to users of entity's financial statement, life cycle and industry and economic environment, ownership structure and the way it is financed, volatility of the benchmark, elements of financial statement and nature of entity. Step 2 is normalization and step 3 is determining the percentage. The financial statement level and specific audit area level. Specific audit area level can be lower to identify the misstatements which are in aggregate. Performance materiality is amount set by the auditor less than materiality for the financial statements to reduce the probability of aggregate uncorrected misstatements as whole. And the materiality can be revised by changing circumstances during the audit, new information, and change in auditor's understanding of the entity. SA 220 complete. SA 330. Auditor's response to assess risk. SA 330 states that the matter determining the extent of test control, length of time during the audit period, expected rate of deviation from control, reliability of audit evidence, and audit evidence from test control relating to assertion. Audit evidence of previous audit. Effectiveness of other elements and internal control, effectiveness of general IT control, effectiveness of control and its application by entity, risk of material misstatement and extent of reliance of control. Specific inquiries when deviations are detected, whether test of control has been performed, additional test is necessary, and risk of MMS has been addressed too. Thank you.